Good morning and welcome to Unusual Activity powered by FinancialJuice.com with George Avedon and Milton Marmonides. Thank you for joining us this 26th of December, day after Christmas. We hope you had a wonderful day off from the markets and activity. This morning we are higher by 4.00 in the S&P 500 futures at 2082.75. We have crude oil, West Texas Intermediate crude, higher by 71 cents this morning at $56.56. We have gold higher by $21.90 at $1,195.30. Remember that 1,200 is a level. We'll dig into that in a little bit here. Also, 10-year 2.253, and the dollar higher by 0.034. The DXY, the dollar index versus 10 other currencies at 90.002. Certainly keeping an eye on that strength in the US dollar, as we are also monitoring these commodities, energy, and raw materials. Certainly the higher dollar index, higher the dollar, the more expensive these commodities are. If you're coming if you're coming from the outside of the U.S. So let's dig into where we were on Wednesday. Certainly a shorter trading day. We traded till 1 p.m. We had a relatively tight trading range, a three-handle range, a three-point range on the SPX. Really towards 1 o'clock, we had this odd sell-off right at the close. So the S&P 500 finished at 2081.88, lower 0.01%. Dow Jones Industrial Average at 18,030.21, higher by 0.03%. NASDAQ higher by 0.17% at 4773.47. Dow Jones in record territory here, folks. So we're continuing to monitor that. A few things that are coming out over this morning that are making a little bit of waves in the markets this morning. Certainly oil is up, as we've indicated. Talk of rig fires in Libya. This is on the heels of militia attacks. Also, output has declined to 352,000 barrels per day. This is compared to 1.6 million barrels per day in 2011. So eyes on Libya, at least for the morning, with respect to militia attacks and its output. Also on Russia, we bring this up because they've been in news. Certainly the Russian-Ukraine situation has been less in news, obviously. The real concern here is where the Russian economy will go, where the Russian ruble will go. So last week, reserves were reduced by 15.7 billion in defense of the ruble. Their reserves stand at 398.9 billion. Since the beginning of 2014, those reserves have fallen by 22%. So that's kind of a larger picture in what it takes for an economy to support their particular currency. When you see such fluctuations, such volatility in the ruble as we have seen in the last few weeks here. So also out of Japan, inflation drops 4 months in a row, higher by 0.7, so nowhere near that 2% range that the Japanese central bankers are looking for. Industrial production declines by 0.6%. We're looking at a positive number, and also retail sales decline. So certainly a review Abe economics are certainly under the microscope, if you will. And always, as we're looking around the world and looking for headlines, looking for news that's possibly going to impact, certainly keeping an eye on the Middle East with respect to ISIS and ISIL. As we said before, we haven't seen much coming out of that within the last several weeks, but always a good idea to keep an eye on that. Certainly, we had a U.S. military official comment that operation could last into the years, approximately 3 years. The number, what was mentioned, 3 years, with respect to ISIL operations in the Middle East. As always, certainly oil prices and its impact on OPEC. Non-OPEC nations, larger companies, smaller companies here in the U.S. Certainly, one of the things that was mentioned on Wednesday in the Wall Street Journal was that OPEC was, quote unquote, playing game theory or using game theory to see what the shale producers will do here in the U.S. And this is something that we've been talking about for several weeks here, ever since the OPEC meeting on Thanksgiving Day. So again, continued saga with the oil. We'll continue to see commentary out of OPEC ministers, various Middle East countries as well, I'm sure, with respect to the pricing of oil. This today really very, very quiet economic calendar here in the U.S. We are expecting Fed balance sheet at 4:30, money supply at 4:30 as well. We are anticipating a less than usual news flow for today. A lot of participants are out. But again, we're having some very interesting news come out today, so I think it may make for an interesting trading day. And one of the things that we're going to put up for the next few days as we're getting ready for 2015 is, what are analysts talking about the desks? Taking a look back on 2014 hasn't been a very easy year with respect to volatility. A lot of folks have been wrong with respect to rates, with respect to oil. Negativity in the markets in the very beginning of 2014. Certainly, we're at record levels now. So, what are analysts and institutionals discussing for 2015? It's really number one. It's FOMC decisions and commentary. Also, when will rates begin to lift in the U.S. and what's the ramifications on the yield curve in the U.S. and on the dollar versus other currencies, and that's something that's in focus here. Also, global central bank actions, their commentary, their actions. Certainly, we've seen continued weakness out of Europe, continued weakness out of Japan. So that's in focus. Also, oil will continue to be in focus. Certainly, oil being at 50, let's say hovering between that 55 and 60 level, it's quite a bit lower than we were earlier in the year, in July. Really, the concern here is which nations will begin to stammer as oil continues to be in this level. Will oil rise? When does it rise? What impact does the lower oil have on shale drillers? Further commentary out of OPEC ministers. Also, keeping an eye on, we'll see what happens in 2015 with the Russia-Ukraine situation. Certainly the sanctions from the West having an impact, and that rolls right into Russia's relationship with China. We've been discussing this for absolute months, it seems like, and that's really um, if the West isn't giving, let's put it in layman's terms, if the West isn't giving Russia play, Russia will find the demand somewhere else, and that's in China. And as we mentioned on Wednesday and Tuesday, China is conducting itself as if it's the uh, another avenue where the IMF perhaps can't go. Also keeping an eye on OPEC, non-OPEC commentary, actions, and also certainly continuing a very, very keen eye on macroeconomic numbers as we begin to go into 2015, and so that's what we're keeping now in 2015. I'd like for Milt to come in with his commentary on today's actions, what he's seeing. Milt, one of the things that's on my mind, I know you mentioned on Wednesday, you look at shorter term, always at the longer term as well. But one of the things that you and I have talked about is this implication of the strong U.S. dollar. We had a really strong U.S. dollar in the fourth quarter. My bet, perhaps it's not exactly a binary bet, but my bet is that we'll have commentary as U.S. companies are repatriating their monies back into the U.S. for their earnings in fourth quarter, and I think the strong U.S. dollar is going to have an impact on earnings. That's my bet. I'm going out there. That's I don't know what your thought on it, but
No, I agree 100%. That's typically when there's a stronger dollar, it's a net negative for certain companies, and it's not even being mentioned. People are not even mentioning the fact of how strong the U.S. dollar is. The funniest part about it is no one even mentions it compared to oil, when the oil is vastly impacted by the strength of the U.S. dollar. No one even mentions it. So it just seems that no one is really talking about what matters. Everyone, all these people, all these talking heads are coming on TV telling everyone in the world to buy this market. But no one understands the reasoning behind it. Why? The number one reason, where else are you going to put your money? Okay, that's understandable, but what happens if, God forbid, the market collapses? What's going to be the reason behind that? Well, you told me to put it there because there's nowhere else to put the money. No one really knows. No one really talks about what's going on in the scene in the back. I never hear anyone mention the U.S. dollar's strength. You're one of the only people that I speak about that even talks about the strength of the U.S. dollar. I speak to a lot of people throughout the day, and no one even mentions that once. So, it's something that I think down the road will be in effect, and when that happens, where you heard it first, right on our show.
Absolutely.
So let me just mention, let me do the tech real quick. It's going to be a dead day. No one's going to be around. It's going to be one of those days where it doesn't even matter what happens. Typically, statistically, today is one of the strongest days of the year in the markets. Not strongest as in the largest moves, but the strongest as in the most green positive days. So you may have one of those days continuing. You may have that statistic continue on. We've moved up 6 days in a row. It's been years and years since we've had a 7-day continuous rally. So it's a big statistical day. So we'll see what happens at the close. Let me just go over a few some text, and then I'll just pass it back to George.
Absolutely.
ES, we're looking at the bulls are clearly in charge. We're looking at that high, the 2085, and the ES. As of now, it's it's right there, it's right by. It's 2082.83. We'll see what happens on the day trading, on the trading side, on the day of today. Volume has been non-existent, so many people are out saying, "Oh, well, this move is not really validated by." Well, I understand that, but it doesn't matter at this point. The higher it goes, the better it is for the bulls, no matter what any bear says. The bears need this rally to end, and they need it to end quickly, without any V-shaped rallies. These V-shaped rallies are a killer for the bears. So right now, 285 to the upside. We're looking at 270 support, followed by the 260 and the ideal 250. So 270, 260, 250. the keep an eye on the volume. The volume is just not there, and it's not going to be there, in my opinion, until the end of the year. Yeah.
Why are V-shaped recoveries killer for bears, Milton?
Well, you're short the market. Okay, the market drops 5%. In 2 days, it's back up 8%. That's why it's bad for bears. It's just
There's no
uncontrollable.
sustainability, right?
It's an uncontrollable reaction. At that point, you're just like, what happened? What just happened? You don't have the opportunity to get out and take a small or whatever. You just don't have the opportunity to do anything in those kinds of in these kinds of markets. So even on the bull side, the market could jump 5% in 3 days, and you're just like, whoa, what just happened? But that's the market we are in right now. Right. There is just no liquidity, and people just have no idea what's going on, and all they're doing is buy. And as of right now, it's been working. So typical mindset of a Wall Street trader: if it works, let it keep going until it doesn't work anymore. So right now, it's buying the dip. Buying the dip, buying the dip. Until that ends, it's not going to stop.
If it ain't broke, don't fix it, right, Milt?
Exactly. So that's what the feel is right now. Oil is up 18 cents this morning. Clearly been coming in. It was up earlier at 56.59. Currently right now at 56.03. 55 number. We've been mentioning it for weeks. That's the number. It's building a base. It's trying to build a longer base than people were expecting. And typically, when it is broken, it is more significant now. So we're watching it. We're watching this level. We're watching that 53.60 number to the downside. If that level is broken, we can see the 40 handle. Right now, we're watching it. Watching this 56 number. Watching the 55 number. 54. And ideally that 53 to the downside. Upside, we're looking for that 59 break. It tries, but then it breaks down again and goes back to 55. While I speak, 55 number again, 55 handle. So it seems to be a magnet. And as right now, technically it's building a base. You want to see either the bulls to the upside, bears to the downside, but you will see a significant move off of these breaks. Once we see something, we will let you know. VIX, 14 level support, boom, hit it, stabilizing there now. We'll see what happens going into the end of the week. We mentioned earlier that it could just stabilize at 14 till the end of the year. We'll see what happens. And, we'll be monitoring the option volume and monitoring anything else outside of unusual activity. Lastly, gold. Gold broke 1,200 on the past week. Closed down to a low of about 1170s, mid-range of the 1150 1200 support resistance range. Now back up to resistance levels, 1,200 again. It's going to retest it. If it breaks it, very consistent move could happen. So we're watching the number. Watching this 1,200 resistance level, plus or minus a couple points is not going to be an issue, but we're watching it and seeing if the volume is there. Once again, 1,200 resistance. It's in the tradable resistance support level range right now, and as of now, that's going to be the number we're going to watch.
Milt, we talk about this offline a bit. I know we bring up some notions of, for example, USG, but Nat Gas has just been going lower and lower and lower and lower. What's your feel on that? Technically, can you pick out some? I mean, I think
technically, George, I'm going to say right now, I was yesterday. We live in the Northeast, Connecticut, right by New York, and I see people cooking food outside yesterday.
Yeah.
It's December.
Yeah.
It's 57 degrees.
That's right.
If you do not understand the reality, and that is reality.
Yeah.
The reality is people were outside cooking Christmas dinner on their barbecues yesterday. People were barbecuing meat. In reality, the temperature should be 30 degrees in the Northeast. We hit 57, 60 degrees yesterday.
Right.
If people do not understand why natural gas and even oil is getting hit, there's your reason, everyone. Right there. You have it's not cold. It's warm. It is abnormally warmer in the Northeast. Has been for the past few weeks.
Yes.
Natural gas trades off of that big time. People do not understand that. Technically, who knows where this thing could go? This thing could go back into, a 15 number of breaks. It could, it could have a substantial move lower. But as of now, it's a 2-year low almost, garnering faster and faster. Down at $3 for natural gas is, it's unheard of. But, walk outside. It's unseasonably warm for this time of year. And natural gas trades big time off of weather-related, quote-unquote situations. So that's a big reason why gas is trading where natural gas is trading.
Absolutely, look, it's a demand supply issue. We've always talked about that. It's Econ 101, folks. Thanks, Milt. So let's dive into specifics on where we're seeing commodities, energy, and raw materials this morning. Again, crude, West Texas Intermediate crude, we are at 56.02, $56 and a penny. We're a bit higher than that just when we started the show. We have on the distillate side gasoline, folks, and this is the other piece of when we look at these prices. Certainly, we look at producers, we look at OPEC, we look at refiners and the process but really it's also the impact on the consumer, folks. If the consumer is spending less on gasoline, I can tell you personally, in the Northeast, there's a difference of almost $2 per gallon on gasoline within the last few months, and that is absolutely just massive. What a great boon to the consumer. Yes, in the long run, it can have an impact on shale drillers. It can have an impact on countries, small and large. But in reality, it just gives a great boon to the consumer with respect to discretionary income, and that is just absolute key there. So we have gasoline at 1.5233, higher by 0.0106. And what we'll do here, we still have the charts up here, folks. We'll pull up gasoline. Just give us a moment to do this. These are gasoline futures on a weekly basis, just taking a little bit of time to come up here, folks. Natural gas at 3.014, lower by 0.016. Heating oil down as well, actually at 1.9290, higher by 0.0054. Excuse me, there it is higher. Having a little bit of an issue on this on the charts here on gasoline here. I wanted to put up a chart here. We have gold higher by $23.60 at $1,197.10. Silver higher by about 50 cents at $16.20.5. With platinum higher by $23.20 at $1,214.30. Let's switch back to the presentation here, since we're having a little bit of an issue on our charts. Our apologies for this. Also, cocoa lower by $11 at $29.53. The reason we bring up cocoa, there's the Ebola-stricken nations are large cocoa producers, so we'd like to put them in. There was some rumbling of on last couple of days of someone being hospitalized in Bellevue again for Ebola-like symptoms. So should we hear something like that, we'll post into the Unusual Activity app if there's any specific news with respect to that. Also on the yield curve, let's get into the yields a little bit. This is something that folks, I'm not sure why our news organizations aren't really discussing this, but if you take a look at the yield curve, folks, this is rather astonishing. You're taking a look at the 5, 10, and 15 year. The 5 year is 1.756. The 5 year 1.756. If you remember, a month ago it was 1.56. So we had a rather significant increase in the yield on the 5 year. The 10 years hanging out here at 2.246, a little bit lower yield than we actually when we started the show here, and very much lower yield than we were about a year ago. So, and also on the 30 year, we're at 2.804. A year ago on the 30 year, we were at 3.92 here, folks. So what a difference in yield. Remember, we were talking about this quite a bit, that the expectation for yield was higher, that the yield was going to be higher by the end of the year. Boy, what a miss on that on the part of some analysts, and what an interesting yield curve formation that we have. If you're taking a look at the 12-month 2.5, that's a little bit higher than we were. 2 year, a little bit higher than we were about a year ago. In between the also, but it seems as though a little bit more, not as steep as we were about a year ago. So that's very interesting. I'm sure the FOMC and the Fed are taking a look at that rather closely. Also, let's take a look where we are on, if there's any, we're going to pick out some specific headlines that were making news and coming around. We're about 5 minutes before the open this morning. As we mentioned, natural gas futures dropped below $3. There was a moment that actually dropped below $3. This morning we're at 3.014, so very close to that $3 mark. Carl Quintanilla tweeting, the Dow's up 5.6% in the past 6 days. That's almost as much as strategists think stocks will rise for all of 2015. So really considerable swell in positive sentiment in the Dow within the last 6 days. We'll see if that actually continues. We have the S&P futures higher by 4.25 at 2083.00. As we mentioned again, the U.S. dollar continues strength. Unfortunately, our charts are malfunctioning at the moment. But what I advise is taking a look at the Dow Jones Industrial Average, taking a look, comparing that to the dollar, and also taking the U.S. dollar for the last year and comparing that to the volatility in the oil. You'll see a very interesting inverse relationship between the U.S. dollar and oil. Certainly in Econ 101 and trade economics, the higher the currency versus other currency, and if a particular commodity is denominated in that particular currency, it's going to have an impact on pricing. It's going to have an impact on trade, and that's what's going on in currencies globally. That's the concern with the ruble, the weakness in the euro. Let's mention the euro at 1.2122. That's been continued weakness as well with relation to the U.S. dollar. Even in such a low volume day, we must take a look at that, and we must keep an eye on that as traders and investors. It's absolutely critical. So also, this is very interesting. We wanted to put this up, and this notion of, are we having good retail numbers, and are we having poor retail numbers? So this is Wall Street Journal versus Reuters opinion. Early retail estimates show best holiday sales in 3 years, according to the Wall Street Journal, and traditional retail is unlikely to beat holiday shopping forecasts, according to Reuters. So there you have it, folks. The geniuses are out, and still no opinion. And that certainly makes a market. It certainly bodes well for opinions and the fact that really there is no analyst out there, there is no institutional trader out there that has a great feel on where the markets are going, and that's why we constantly stress due diligence. We'll run through some of the larger insider transactions this morning. Insider purchases. We have ILIU, Interleukin Genetics. We have 10% owner purchasing $2.6 million worth. VNDA, Vonda Pharmaceuticals, 10% owner purchasing $2.3 million worth of the security. Let's see here. We have a few little ones here, folks. CPTA, we have $85,000 worth. OHAI, OHA Investment Corp. We have seen OHAI before, and this is why we bring this up. You'll see also during the day us bring up insider purchases. Those are very when you see insider purchases, maybe you'll not have an immediate response in the security, but take a look at the daily chart on that, and you'll start to see the correlation between insider purchases and stock movements over the long term. UPLD, Upland Software, we have $82,000 purchase there, and so again, not very much. Certainly a slower than normal, usual news activity, but keep in mind, folks, there are still participants out there, and we'll have we may have some very interesting activity during the day, at least in the first few hours. But the anticipation after the opening rotation, as the markets are open now, anticipation after the opening rotation is that volume will subside, and so don't overtrade this particular market. So, folks, thank you for listening to Unusual Activity powered by FinancialJuice.com with George Avedon and Milton Marmonides. Wishing you a great day, happy holidays, and good hunting.